Welcome back, and can you believe it? It's another week of talking technical, and we are again got some nice requests. Some is brilliant opportunities. I must compliment some of the viewers. They spot some nice shares, and then I think what they want to do is they just want a little bit of confirmation. We also pick up that a lot of viewers watching this program actually wants to learn, and they want to see how is technical analysis and how effective it is and what do we see, and by doing that they can also learn. Of course, thank you for all the subscribers that we do get, because then you've got 5 opinions per month that you can ask about, and then you can learn. I sometimes just get a short email saying, Frans, I'm seeing this inverse head and shoulder, am I right? Now the moment I get that, I am happy, because then that person is starting to learn, he's asking an informative question, and then we can just guide them. But the first request was Roku Incorporated, and this viewer also asked, is there maybe a platform where you can trade it on? Well, my friend, I will not know, because I'm only looking at what we call Bushman tekening, a day in and day out, or charts, as everybody will know it. But in our office, Christelle is the broker, and she will probably assist you with a platform or where you can trade it. Drop her an email at admin@fransdeklerk.com, and then she will be able to help you. But first of all, let's have a look at Roku. Well, first of all, this share, let's just see. Wow, can you believe it? This share was well above 500, well, almost $500 a few months ago. Well, that is in July 2021. This share was as high as $4.95 on this chart. I mean, that's massive. And from there, it dropped now, and it's now trading at $88. Just to show you what an ugly sell-off we had here. But what makes me a little bit optimistic is the following. I just want to zoom it out to you. Can you all see this beautiful 2 candles with the lower shadows? That, of course, is a teaser bottom. That is positive usually. That tells you that there's some buyers. The technical rules say you must take the low of these candles. I just want to draw in the line there. You take the low of those 2 candles, and the moment it goes below that, the double bottom or the tweezer bottom is off the table. What does the rule say? Is that yes, although that's the low, it must close below that low to wipe off that formation, and it didn't close. So this tweezer bottom or double bottom is still in play. It's not wiped off the table. So where will I look at maybe buying it? I will look at that high of that candle, because in this market we see that the market is very unsure. The other day our market went up 3% in one day, and then suddenly lost a lot the next day. And the same with the S&P 500 billion day, very strong, and then suddenly just fell off a cliff. And that just shows you that investors are not 100% sure. And we will have this kind of market until the fundamentals start to play out and people can see what the interest rates are doing to the market or inflation, or that's the case. Well, let's have a look at Roku. If the share can get above, and there's your level, 110.56, I know it's $20 from here, but rather buy it above 110.56 and buy it now, and it drops below that low. And where's that low? There you are. The low is at 75.03. So first of all, if you buy it on a chart above 110.56, maybe make use of a stop loss of 75.03, and my target will probably be the high of that little candle there, and that will be 141.93. What's the golden rule in this kind of market? The golden rule in this kind of market is to wait, be patient, and let the trade comes to you. I've seen it many a time in the Aussie, in the S&P 500 for us on the speculative group that is trying to trade it intraday. Sometimes we're a little bit early. The other day I called a trade for the guys to watch. And what happened? The share or the market went way above our level just to turn around and eventually figure our level and then gave us that little money. And that's the big thing. If you have patience, the market will come to you like this. Look at Roku. There's maybe a lot of investors that bought all the way to the downside. Somebody waited for this formation, and that was the clue. So wait for it. Buy it only above that resistance line. When that turns into a support on a weekly basis, remember this is a weekly chart. Stick to your stop loss, and let's see, maybe you can get target to the top. Our next request is Alphabet or Google, as we all know. And I see a lot of analysts say that some of these big technology counters are now cheap, very cheap. For me personally, I will say I will stick to my old rule. I will say, what do I see on the chart? Remember, this is a weekly chart. Look at this beautiful inverse hammer that's maybe hitting out the lows. And while the share is trading above, and that's the low of this candle, 101.88, I can say that this candle tells me that there were some informed buyers buying the share. Now, but after that, what did we see? We see numerous candles. In actual fact, we see a cluster of candles. But in essence, we are stuck between a consolidation. Strangely enough, we saw that with Roku as well now, and here you are as well. There's the consolidation. For me, I will wait patiently for Google or Alphabet to tell me when I can buy the share. And where will I buy the share? Can you see this beautiful bullish engulfing candle? That tells me there were some strong buyers around. They bought the share, they were excited. But where will they become very excited? And that will be if the share can break above this line, 119. I just want to get you the exact level, 119.69. If it breaks above 119.69, we can see the share move out of this consolidation, and maybe it can go all the way up. Look at this beautiful gap there. There's a gap on the share, and that gap is between 132.09, and the gap closes at 137.97. And where's my stop loss? Of course, will be the low of this candle, and that is sitting at 101.88. In actual fact, if I buy a share at 120, I don't want to have a 20% stop loss. There's some other rules that you can follow. I've got a friend that follows a 5% rule. I've got some that follows a 3% rule. If they're wrong with 3% out of the money, they close the position and they wait or look for something else. Let's look at Avis budget group. Same thing here, weekly chart. It looks like the share is trying to find its feet, but can you believe this? Look at this candle. And I want to actually tell you something about a candle like this. This candle's low of the week was, there you are, the low was 168.56. Suddenly, during that same week, it went as high as 545, and then it fell all the way back. What I've learned over the years, and that is not if you are a long-term investor. If you are a long-term investor, you buy the share, you hold on to it because you probably want to accumulate the share over time, you want the dividend, you don't actually think about selling it, so you just hang on to it. But I've learned with trading one golden rule. Say, for instance, you buy the share at $176, and your target is maybe $190 or $200, and you say, I'm happy with that profit because there's a resistance for me, there was previous maybe a high there, or that's a nice markup, maybe 5% or 8% or 10% profit that you want to make. If you have that in mind, then put that order in the system, because what can happen is you can have a week like this where you maybe buy here, the target is up here, and then suddenly, before you know, you've hit your target, you've made your money, and a day later you can see the share is below that. So that is just a nice rule just to protect yourself. I sometimes do it on an overnight trade. If I'm in a position and I'm happy with the trade, I put in my order, and sometimes, usually, when I open up the computer the next morning, I see, wow, the S&P traded there, thank you so much, and then I just walk away and find for something else. Or even your stop loss, you can put it through overnight. If you're scared and you're nervous, you can put it in just to protect your capital. So there's nothing wrong by doing that, but that's for traders. That's not for long-term investors. Long-term investors, I've got a friend, Pierre, he's a long-term investor. He never sells or rarely sells a share, and I don't think he does that, but for a trader, you probably need to do that. But if I look at the share is building a base here. It does not give it a buying signal yet. You can maybe see it's finding its feet, and for me, I will personally use that little line there, because that will give me an idea. That was the upper shadow of that beautiful dragonfly, gravestone doji. If it can get above that, Then above 180.68, it will give me a beautiful higher high. I will make use of a stop loss of 143.70, and then maybe it can go beautifully up and maybe go all the way back to that resistance there, 249.77. But for me, I will wait before I buy, and I'll stick to my stop loss. Well, the last share for this section is Wells Fargo. I hope we can get to some of the South African shares in the next lot. But if I look at Wells Fargo, you remember this is a massive bank. It's an investment bank. And it also received some ugly selling. I mean, from well above $60, it went all the way down to, can you believe it, $27 for a big investment company. But what I see here is I look at all these lower shadows. That tells me there's some buyers around. What I also like about the company is that we've got this resistance line. Remember, this is a weekly chart, and we're on the brink of turning this resistance line into a support. So I will buy above 41.21. I'll make use of a stop loss of, there you are, 37.43, and my targets to the top will be 44.19, 46.49, and even as high as 49.10 if there's a beautiful relief rally on the way. I just want to also show you that there's also beautiful, look at that, falling wedge here. It looks like it wants to break out, and this falling wedge, the target of it will probably take it all the way up to 51.77. It just shows you that there's some shares that's been hammered a lot, and they can maybe give us a beautiful relief rally. But remember, it's a relief rally until we know that the S&P or the NASDAQ can move above its 200-day moving average. For that, it's still a bear market or a negative market, and it's only used for trading. Well, thank you for watching the show. Visit our website, www.fransdeklerk.com, for more info, and we will chat again.